Okay, we are going to get straight to your questions. A few of them have come in, some of them are still coming in, and this is coming from Chris. Thanks for watching, Chris. Saying, good morning. Would you have a chance to touch on how to best use filters? Any takers in the room?
We do this fair bit, but it's very specific. So you've got to first work out what thematic that you're going for, and then look at the thematics that work for that. So it's a specific sector, or if you're looking at the food thematic, then you look at inflation, food prices, which relative food prices are doing well, so which exposure you should be looking. So it comes down to, I think, first you've got to cut down to what sectors that you want to concentrate on, and then you can filter down on the specific data points on that specific sector. Doing it from a market level, it's just too many things to play, and it's too hard to consume. Okay,
so Chris, you have to have your starting point. This is from Rodney. This is for Sharesight. Doug, that's you. Do Sharesight, or do you properly fully support ChiNext holdings?
We do, actually, yeah. So we take data from both ASX and the ChiNext as well. Yeah.
Okay, that's a quick one. Here's one from John. What ideas, if any, does the panel have about getting into pre-IPO opportunities for an individual SMSF? Mathan, where do you look pre-IPO? And Doug, you can maybe just shed a little bit of light on the private side of the conversation as well.
It's tough because I'm partial to be, a bit cagey about IPOs because you don't get road-tested data. And that's the great thing about the market. The tire hits the road, you see the results coming in, market tested, you have a track record of management. And when it's off the record, it's really tough. So you really have to trust management. And that's the thing. When you're going into an IPO, one, you got to know that that business model has a unique moat, unique advantage that's going to sustain it, because it's going to be tough early. And they're coming to the market. So they're going to be raising money for some growth. Otherwise, there's something wrong with it. So they're going to be going for growth. So you've got to be ready that these guys have got to deliver. So you've got to trust management. So do your work on management, do your work that the business model has a unique advantage, then you're almost there.
Okay, so Doug, look, it's not exactly a technology related question, but to the point that you were making earlier about private companies and how they're becoming more of a focal point.
Yeah, so I would say I agree with Mathan. You understand who management is, how long they've been there, why are they going to list? Like, what's the timeline? Are they looking to dump their shares and get out, or are they looking to grow and continue managing the business? I would also say that I would say to investors, have a look at the new crowdfunding platforms that are out there, because they do some level of screening and analysis to ensure the companies are legit and the reporting is standardized to some degree. And then finally, I would always encourage anyone looking at a pre-IPO business, really know the business, hopefully use the product yourself. If you're looking at technology, if it's something like Sharesight, or if it's back in the day like a Xero before they listed, like, understand that business and hopefully use it yourself and understand the economics of it.
Al, this is probably a good one to bring you in on, because I know on Simply Wall Street you do a lot of data related to management, remuneration, all the rest of it.
Yeah, absolutely. I mean, pre-IPO, first of all, you have to access it. So then half the people don't have a broker that can even access pre-IPO. So I don't think that that's quite like fair yet. I would say it's not on an equal playing field. So that's one thing to consider. And the whole IPO process, I think, is still something that's going to change over time, because there's still this whole idea that there's like a pop after the IPO, and they go to investment banks and it gets sold. So it's not, I have to say the entire process is something that needs to be overhauled. But to your point, yeah, we have, actually we have a ton of data on companies, even pre-IPO. We just don't kind of release that at the moment, because the companies still have to submit the forms to the regulator wherever they are in the world. In the SEC, you have the S1 that goes out before the IPO. That has quite a bit of data on it, and that's not something that's not going to go and change afterwards. So there's a ton of data on pre-IPO companies. I would say, honestly, for a lot of investors, you can wait till after the IPO, because we keep talking about this investing for the long term. Why are you rushing to get in? Just relax, let it IPO and see if you like the business, and then buy it and just take it slow. But I think that the way that you analyze an IPO business actually is the same as any other business. You just have less track record, less data. You should still be looking at the management for any business. That's like a huge part of it. And again, yeah, are they aligned? That's what it all comes down to. Are they the best people to run the business? Are they aligned? And usually it doesn't take that long to work that out if you do a bit of digging.
Okay. Pat, you knew this was going to happen, so I'll just get it out of the way. It's taking us a little bit off script, but Pat, we've got a question, your view on any crypto ETFs.
Buyer beware, I guess, is sort of the answer. On our end, we construct portfolios where we can see a track record on the likely risk-reward profile of the asset class. And as appealing as crypto on some levels can seem, it has a level of volatility and unpredictability that we have a lot of clients that invest in crypto and have SixPark as a portfolio next to it as a core satellite hub spoke, if you will. But it won't be an asset class in our portfolios anytime soon because of the unpredictable nature of it.
Thank you for playing game with that one there, Pat. Listen, guys, we are coming up against it, but this is an interesting one. Just asking, when you're starting out DIY investing, constructing a portfolio, how do you view cash in that? I mean, if we talk about the technology involved, that's one part of the conversation, but I mean, does that need to be sort of part of your thinking as well? Mathan?
Yeah, I think cash is huge. Cash is king. People underestimate the power of cash till things go wrong. And the reality is risk management, as I said before, it's undervalued. You have to look at, people think of, oh, I might lose 50% here, but I might make 4 or 5 times, so that's my risk return play. But you have to remember, you don't have to be like that. You can use cash as a position where if you think the market is higher risk than what it has been, you can take a bit of money and lock it away in cash, leave it. When opportunity comes, you go in with it. So using cash as part of your investment strategy, I think it's massive. It just also helps you understand risk. So if you do that for 12 months, you will know through the 12 months how much cash you held in your investment portfolio, and that tells you what your perception of risk was through as well, and you learn from yourself.
Okay, listen, we won't be able to get to any of the other questions that have come in. Thank you, though, for submitting them. A huge thank to our expert guests, Pat Garrett, co-CEO of SixPark, Al Bentley joining us as well from Simply Wall Street. Thank you guys for joining. And in studio with me, Doug Morris from Sharesight, Mathan Somasundaram from Deep Data Analytics, and Andy joining us from CMC Market Stockbroking. I know where you're from. I can see your book. Andy Rogers, thank you. And thank you for watching. It's been great to have you along. If you have missed parts of this event, we'll share it with you as catch-up shortly, and it's not too late to tell your friends to sign up via the link that is on your screen right now. It's pretty easy to remember. Thanks again for watching. Mind the disclaimer, and we will see you soon.